Today's market has three main themes. Bitcoin has retreated to 91,000, the Fed injected $53.3 billion, and Ethereum is under pressure near 3,100. Whether now is the right time to enter the market is the question. January 20th, Tuesday. This is BTV Chinese channel CoinChain Synergy. I'm Michael. Let's first look at the most important data headlines in the crypto world over the past 24 hours. Our data headlines take 3 to 5 minutes to quickly scan all the sentiment, capital, and technical aspects of the crypto world. Let's see, after this wave of liquidations, Bitcoin fell below $91,000 today. If you watched our weekly review, this rebound was almost a perfect time for everyone to reduce their positions, right? So the market looks a bit rough right now, but if we open up the books and take a look, the spot ETF side is actually very calm. Total AUM is still steady at $124 billion, showing that institutions haven't fled at all. And what's more interesting about the data is that while it looks scary on the surface, it's actually very calm underneath. Single-day ETF funds did see an outflow of $298 million, but if we look at the 7-day moving average, there was still an inflow of $873 million. This shows that institutions aren't just flipping the table and leaving. Currently, ETFs hold a total of 1.309 million bitcoins, with a daily outflow of about 4,342 bitcoins. So it looks more like institutions are rebalancing, or you could call it the institutional version of buying low and selling high. That's a better way to put it. So what's the key point? Look at the premium. Even during this correction phase, you can see that ETFs are still maintaining a positive premium of 0.33%. This at least shows that the demand side hasn't collapsed. It's just sentiment cooling down. So this January dip is essentially an unexpected liquidation of derivative leverage that caught people off guard, combined with the cooling of interest rate cut expectations causing trouble. On Polymarket, there's a prediction on whether Bitcoin can hit $100,000, and the probability has dropped to 25%. Isn't this just institutions changing their tune? Overall, it looks like a state of hitting the brakes and waiting to see. So now, in the market, whether you're an institution or a retail investor, it's time to short what needs shorting, hold what needs holding, sell what needs selling, and take profits where you can. Can we hold steady in 2026? Please follow our weekly review. We'll look at it week by week, candlestick by candlestick, in detail. Japan has dissolved its House of Representatives. This news has been repeated over and over in major headlines. But for Bitcoin, it's basically just a bystander. This is because Bitcoin's pricing power isn't in Japan at all. The coins are concentrated in the hands of the US and its partners. Japan's position is so small, it's not even a variable. So, where the price goes still depends on US monetary policy. Can spot Bitcoin continue to attract capital? Will institutions buy? So at most, when the yen drops, it just looks more expensive for Japanese people to buy Bitcoin. It's actually the exchange rate causing issues, not global capital hedging. What really matters is whether monetary policy can be sustained. If the LDP can stabilize the situation and push forward Web3 crypto tax reforms to lower taxes, then Japanese institutions will have a chance to gradually enter the market. Otherwise, no matter how many prime ministers change, in Japan, at least in Web3, the pace is still a mess. Global Bitcoin, or rather crypto pricing power, is still dictated by the United States. Current market sentiment after this pullback has warmed up a bit, but it's not yet so high that it's irrational. Let's look at the 30-day line of the Fear and Greed Index. After May 2025, it finally climbed above the 90-day line. This shows that people aren't as afraid lately. The speed of sentiment recovery has outpaced the long-term accumulation of gloom. But this doesn't mean the bull market is taking off. It's more like going from hiding away to daring to look up. So this kind of signal usually appears when the market has just stopped bleeding, but doubts haven't fully dissipated. This isn't the peak euphoria zone, so it's not a button telling you to rush in, it's just saying the market isn't as fragile. So next, everyone should watch if the 30-day line can hold steady and if it can keep widening. If it can hold, then we can talk about a rebound and gradually move on to a reversal trend. Until then, we should still focus primarily on defense. Our show has been on for 6 years, and so far, all our fans in the Chinese-speaking region total about 700,000. If you subtract the duplicate fans who subscribe on every platform, 600,000 is a solid number. So with our daily news, we still need to give a shout out to those who just started following our channel. This is where we track all the big and small events in crypto, boosting your knowledge with news that's close to your wallet and valuable to the industry, curated 24 hours a day. Thursday is our members-only live stream, solving your problems one-on-one and giving you plenty of wealth secrets and investment advice. Sunday at 8 is our open live stream. We've kept these 2 streams going for about 5 years now. So when we curate the news every day, our topic selection is held to a fairly high standard. If you want to boost your Web3 knowledge, spending 15 minutes a day reading our daily report might help you. All right, for today's headline, let's look into whether Bitcoin can actually go up. I entered the crypto world in 15. I'm not exactly an old timer, but I've been through 2 bull and bear cycles. So I won't say I'm incredibly experienced, but I've certainly learned more hard lessons than most. In crypto, there's one thing everyone must understand. No matter how good the story, it can't beat whether the liquidity faucet is open. To put it simply, a price rise cures all ills, and a pump is the ultimate truth. Whether it's Bitcoin, Ethereum, or US tech stocks, whether the market moves boils down to one thing. Is money tight? In the end, it all comes down to whether the Fed is going to inject liquidity. As soon as the Fed injects liquidity, risky assets will start to climb. Especially now, with Bitcoin ETFs still drawing in capital, the market is highly sensitive to policy. How do you tell if a crypto project is high quality, worth investing in, or how risky it is? Just look at how close it is to reserves, reinvestment, and liquidity adjustments. If it's close, these assets will definitely be frequently shorted or longed, meaning the risk is relatively high.
According to the latest schedule released by the Fed, from January 20th to February 12th, the Fed will release about $55.3 billion in liquidity into the market in phases through short-term Treasury bill purchases and reinvestment of maturing bonds, while explicitly avoiding long-term bonds, focusing mainly on short-term Treasury bills with maturities of 1 to 12 months, and executing in batches over multiple trading days, with each operation ranging from about $7 to $8.3 billion. The overall pace is stable and predictable.
As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate.
The market generally believes that this liquidity injection of about $55.3 billion is essentially still a routine operation by the Fed. Adjusting bank system reserves through short-term Treasury bill purchases and reinvestment of maturing bonds does not mean a restart of quantitative easing. The core objective is to maintain the smooth operation of the short-term capital market and the efficiency of interest rate transmission.
Okay, the Fed released $53.3 billion, replenishing bank reserves by purchasing short-term government bonds. Actually, for the market, any extra liquidity is a positive sign. However, after this news was released, you can see that today's crypto prices are all falling, so everyone's understanding of the overall market is basically consistent with our channel's judgment. Let's look at the Fed's rate cut probability. We show it in every live stream, and basically, the probability of a rate cut exceeding 50% won't happen until around May or June. In other words, counting from now, there's still nearly half a year left for crypto prices to fluctuate and find a bottom. So during this period, any price rebound, as long as there's no rate cut, is just a bull trap, just the big players playing games. You must not fall for it. If we look solely at technical indicators, Ethereum's trend is a bit messy, but it's slightly stronger than Bitcoin's. Over the past year, many treasury companies have used Ethereum as an asset reserve, basically copying MicroStrategy's old playbook, which is hoarding Ethereum, betting on what? Betting that the company's valuation will keep rising, the coin price will keep soaring, its net asset value will keep commanding a premium, and the market will still give it a high valuation. So in a bull market, this logic is like a money printing machine. But if the market turns, all treasury companies now, especially Ethereum-focused ones, are undergoing a stress test. As Ethereum keeps falling, the first ones to crack are those with leverage. If you're a treasury company that borrowed money, the debt should be starting to bite back now. Look at the stock prices and balance sheets, they're all under pressure now. There's a company called Nexus that was the first to flash a red light in this round of experience.
On-chain data shows that Nexus sold another 2,500 Ethereum today at an average price of about $3,200, cashing out about $8.04 million, mainly to repay a short-term loan of about $10 million collateralized by Ethereum. This is not the first time they've reduced their holdings. Since October 2025, Nexus has been consistently selling off Ethereum, with cumulative reductions reaching 13,475 coins. Against a backdrop of already weak market sentiment, this series of sell-offs has further amplified downward pressure, pushing Ethereum's price directly below $3,200.
This Nexus isn't very well known. It wasn't originally an Ethereum treasury company. Its former name was Fundamental Global. It likely followed in Tom Lee's footsteps to become an Ethereum treasury firm. Now, its claim to fame isn't how much Ethereum it's hoarded, but rather how it moved its company's Ethereum-backed stock into the crypto world as a token, an attempt at RWA. But just as the transition began, it hit a slump in Ethereum's price, and now it's constantly selling off its Ethereum holdings. You know what they say, right? When you spot one cockroach in your room, it means there's definitely more than just one. So now we have to watch the biggest cockroach. When will Tom Lee start selling his Ethereum? The digital ruble is going global. Mining havens are tightening control. Revolut is crossing over. Pump.fun is pivoting. Can crypto still be free? Over the past year, global digital currencies or crypto assets have been undergoing integration testing with traditional finance. But you must realize that for every country and central bank, the power of seigniorage is essentially the power to tax globally or nationally. It's their most valuable asset, and they won't give it up. So how do national central banks counter digital assets? Every country will issue its own CBDC, a national digital currency, to compete with digital assets in terms of efficiency, sovereign control, and regulatory frameworks. But keep one thing in mind. No matter how useful a CBDC is, it's just not in the same dimension or league as USDT. I'm not sure if everyone gets that.
Now, India's central bank has proposed a major digital finance initiative within the BRICS bloc that could reshape cross-border payments and gradually reduce dependence on the US dollar.
The Reserve Bank of India has proposed linking the official digital currencies of Brazil, Russia, India, China, and South Africa within the BRICS framework, focusing on optimizing cross-border trade and tourism payments and pushing the agenda during India's 2026 BRICS summit. This move continues the path toward payment interoperability from the Rio de Janeiro Declaration and paves the way for the digital rupee to go international. However, it's still largely in the exploratory phase, and implementation depends on consensus among member states. Next, let's take a look at the regulatory side.
Electricity in Kazakhstan isn't unlimited. In 2019 we had a surplus, but that's gone. So in some mining sectors we will stop.
Kazakhstan, a major hub for crypto mining, has taken a decisive step. President Kassym-Jomart Tokayev signed a new bill establishing a comprehensive licensing system centered on the national bank, the NBK. It requires all crypto trading platforms to operate with a license, defines the scope of digital financial assets, and enforces risk controls on par with traditional finance. Bitcoin, Ethereum, and others are classified as unsecured digital assets, tradable only within NBK-licensed institutions, with illegal exchange strictly prohibited.
All right, look, it's not just the US and EU, but also India, and now various stands are starting to regulate and address cryptocurrency, showing signs of easing up. Everyone knows this trend is irreversible. If you can't beat them, what do? You join them, right? Here's a map showing countries where crypto assets, stablecoins, and digital currencies are still strictly banned or completely illegal, marked in red as of 2024. Looking at this map, doesn't it feel quite striking? The top 10 or 20 crypto exchanges, these massive cash cows, are almost all owned by Chinese entrepreneurs. Look, they've all been driven away, losing even the chance for nationalization, even if you just pushed them toward Hong Kong. Think of the boost that would have been for Hong Kong. It wouldn't be struggling so much on its own in the Web3 space right now. We've been analyzing the news and broadcasting daily reports for so long just to tell you that a financial revolution is coming. Stablecoins will inevitably eat into traditional finance's market share, whether they like it or not. Look at the current transaction volume of stablecoins, especially in Latin America. It's grown to $1.5 trillion annually and is still rising. Many tech companies are now rushing into Latin America to seriously handle payments and settlements. Why is that? In many impoverished areas, people can't even afford to open a bank account. At many banks, if your deposit isn't high enough, you're not eligible for traditional financial services. But cryptocurrency is different. Even if you only have $1, with a wallet, you can split that dollar into many parts and send them to many people. To put it simply, what is this called? It's called the countryside surrounding the cities. Bitcoin followed the same path, starting with coders, then the crypto circles, then retail investors, then institutions, Wall Street, and finally, the US president.
On one hand, London fintech firm Revolut has applied for a banking license in Peru, targeting the $4.93 billion Latin American remittance market to challenge traditional banks in high-frequency cross-border payments. On the other hand, meme coin platform Pump.fun has officially launched its investment arm, Pump.fun, committing $3 million to host hackathons and providing $250,000 in funding to projects valued at $10 million, no longer requiring them to have crypto-specific features. Data shows that Pump.fun's monthly trading volume has dropped from a peak of $11.75 billion at the start of the year to $2.43 billion. The decline in speculative gains is forcing the platform to shift toward a more long-term, sustainable business model.
So if you put these two news stories together, you'll see a very important shift in the narrative logic. What is Revolut? They're the veterans of compliance. With a stack of global compliance licenses, they're heading to Latin America to target the mass market. Essentially, they're setting up shop to earn small fees from everyday remittance transactions. Pump.fun, this aristocrat of hype, once so high and mighty, is now joining hackathons and pushing for real-world use cases, and they don't even require you to actually issue a coin. What's this called? It means the tide has turned, the trend has changed. So, take a look at your holdings. Do the tokens you're holding conflict with this trend? Is it a paradox? This will show you whether your portfolio is actually on the right track. If all else fails, check the spot tokens we're copy trading on HKEX and Binance. I believe these assets will stand the test of time. Let's look at the news flash.
The X engineering team isn't hiding this time. They've laid the new algorithm bare, using the same transformer architecture as XAI's Grok. Elon Musk said this algorithm is indeed a bit clunky with plenty of issues, but the upside is it's fully open source. So whether it's improved or where it fails, everyone can watch in real time. This isn't showing off, it's fixing it on the fly for you to see. Trump recently brandished tariffs as a diplomatic weapon. Starting February 1st, 8 NATO countries, Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland will first face a 10% import tariff. If they don't cooperate enough on the Greenland issue, it'll jump to 25% on June 1st. In short, if we can't agree, the taxes go up. South Korean customs took action, handing over 3 Chinese suspects to the prosecution. Over 2 years, this group moved about 150 billion won, or $101.7 million, via underground exchanges and crypto. Now their money laundering route is exposed and they've been wiped out. Philippine police conducted a raid, taking the suspects away and rescuing the victim. A Chinese citizen was held in an apartment to facilitate crypto transfers. The captors demanded $1 million, with over 400,000 already moved, while they kept up the pressure and threats. A full range of suspicious tools was found on site. 2 people are in custody, and 2 others are still being sought. Now we just wait for the justice system to settle the score. The NYSE found its old financial processes couldn't keep up, so they're moving on-chain with 24/7 trading, instant settlement, and stablecoin payments. Binance founder CZ Zhao hit the nail on the head. This isn't crypto being co-opted, it's traditional finance finally coming around. The on-chain system is indeed faster and more efficient, which is actually a plus for the entire crypto exchange ecosystem.
Our show has always had its own membership service. Why did we start it? First, because we want to find people who share our investment philosophy, that slow is fast, and get rich slowly together. Another thing is, there's a brutal but unchanging rule in crypto. Opportunities for massive profits are never opened up to ordinary people right away. True early dividends are always hidden where information is asymmetric, in the offline dealings of small circles, or in some unknown corner of the blockchain that hasn't been decoded yet. So, where is this place? We'll announce it immediately through our member live stream. By the time you see social media posts about a 100-fold coin opportunity, the price has already soared, left its value stage, and entered the speculation phase. You think you're following a trend, but you're actually just holding the bag. The crypto world excels at packaging assets that have already risen as if they're just starting. All stories are told to latecomers. The chips were distributed long ago. The real risk isn't simply missing the start, but rather knowing, deep down, that you have already missed it, and yet still trying to find different angles or perspectives to explain to yourself why there might still be a chance, even when the reality suggests otherwise. In many AMAs, I see kids saying they found a wealth code on some chain today, or hit a 100-fold coin somewhere else tomorrow. I think, kid, the narrative has changed. With this kind of frantic chasing, the market will eventually phase you out. Long-term survivors in crypto don't chase the first thing they see. They keep asking themselves, is it still worth entering now? Only by letting go of illusions can you truly discuss how to survive in the crypto space. Remember, massive profits are never late. They just don't belong to the bystanders. So, all our member benefits are here. We hope you'll join us, strive together, get rich slowly, and increase our Bitcoin. Let's work hard and aim for A9, okay? See you tomorrow.